Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Oklo.
If you find our talks useful, please consider subscribe, like, and comment underneath. All right, let's set the scene properly. It is February 7th, 2026. If you have been following the financial news or even just glancing at headlines, you know the buzz around the nuclear sector has gone from a hum to a roar. It is absolutely deafening right now.
It really is. And for good reason. What we're seeing isn't just a renewed interest in, traditional utilities.
The kind your grandparents held for dividends.
Exactly. We are witnessing a fundamental shift. And the hook for today, and why we are focusing on Oklo, is that this isn't a utility play. It's an infrastructure play for the AI boom.
Right. The intersection of data centers and clean energy.
It's the precise intersection. That's the whole story.
Which is what everyone is talking about. We hear AI needs power and data centers are the new oil refineries. But today, let's really unpack how Oklo fits in. Because, let's be honest, looking at this company requires a bit of imagination. Before the sexy stuff, the AI deals, the tech, we have to address the massive, flashing neon sign in the room.
The pre-revenue elephant.
Yeah. I look at the revenue column for Oklo, and it's blank. There's a zero there.
Right. And that is the first thing investors need to understand. If you can't get past that, this stock isn't for you. Oklo is, at this moment, a pre-revenue company.
So they're not selling power today?
Not yet. They are a developer. They are building the technology, securing the sites, and navigating all the red tape.
So for the listener who might be used to looking at PE ratios or quarterly sales growth, that's not the game we're playing here.
Not at all. Think of more like a biotech company in phase 3 trials.
Or a miner before they've dug the first ounce of gold.
That's a great analogy. They are currently unprofitable, which is completely standard for this stage. They are deep in R&D. Their focus isn't profit margin. It's getting that first deployment operational.
And the target for that is 2027, right?
The target is 2027.
Okay, so about a year out. But let's play devil's advocate. If they aren't making money, what are they building? I mean, nuclear power isn't new. What makes their moat special enough to justify this kind of valuation without any revenue?
The concept of fission isn't new, no, but the execution here is radically different. Their flagship tech is the Aurora SMR small modular reactor.
And it's not just a shrunken down version of those big cooling towers we all picture.
No, not at all. This uses what are called fast fission reactors.
Fast fission. That sounds like marketing or something from a sci-fi movie. What does that actually mean?
It's very real physics. Most reactors today are thermal reactors. They use a moderator, usually water, to slow down neutrons so they can split atoms. It's kind of inefficient. Fast fission keeps the neutrons moving at high speed. This allows the reactor to be much smaller, simpler, and, this is the key, it allows it to consume fuel that traditional reactors just can't.
So by keeping things fast, they can shrink the footprint.
Exactly. The Aurora is designed for 15 to 75 megawatts of electric power. Tiny compared to a gigawatt plant. But here is the wow factor that really sets them apart economically.
Okay.
These reactors can run for 10 years without refueling.
Wait, hold on. 10 years, so you turn it on in 2027 and you don't touch the fuel until 2037.
That's the design. Think about the operational efficiency. Traditional reactors need refueling outages every 18 to 24 months. You shut it down, bring in crews. It's expensive, it's complex.
It's a huge operational headache.
Right. Oklo is proposing a battery-like model. You install it, it runs, provides baseload power for a decade. It changes the whole economic model.
That is incredible. It basically turns a power plant into a really long-lasting appliance. But I know there's another layer to this fuel story that I found surprising. They aren't just mining fresh uranium, are they?
No, and this is where it gets really interesting, both economically and environmentally. Because they use fast fission, they can run on recycled nuclear waste.
So they're taking the stuff everyone is terrified of, the waste we don't know where to store, and turning it into fuel.
Precisely. It solves two massive problems at once. First, it lowers their long-term fuel costs because they're using trash as treasure. Second, it helps solve the national waste storage issue. Nuclear waste retains about 95% of its potential energy.
We just couldn't get to it before.
Exactly. Oklo unlocks that remaining 95%.
Trash into treasure. It's a brilliant loop if they can pull it off. But if is doing a lot of heavy lifting, let's go back to the finances. No revenue. How do they keep the lights on?
It is expensive, but they have a surprisingly robust balance sheet. You have to remember, they came public via that SPAC merger back in 2024.
Right, that brought in a lot of cash.
It did. It netted them about $306 million in gross proceeds.
Yeah.
So as of right now, they're still sitting on significant cash reserves.
And what about debt? Infrastructure projects are usually loaded with debt.
No debt mentioned. That is critical. It means they aren't bleeding cash to bankers. They are spending it on engineers and R&D.
So where is that cash going?
Reinvested directly into growth. They're pouring it into a $1.68 billion fuel recycling facility in Tennessee and a partnership with a company called Nucleo for fuel fabrication.
So they're building the whole supply chain.
The whole ecosystem,
Oh,
not just the reactor.
okay, so the model is build the ecosystem, and they have the cash. Let's shift gears to the chart, because if you've been watching this stock, it has been a wild ride. Volatility is an understatement.
Wild is putting it mildly. A total roller coaster.
I mean, 2025 was insane. A rally of 238%, hitting an all-time high of roughly $193. That's a massive move. It felt like everyone woke up and bought it on the same day.
It was the AI trade spilling over into energy. The market suddenly realized data centers need staggering amounts of power. But, markets don't go up in a straight line.
And what goes up that fast usually comes down hard.
It does. And we've seen a sharp correction, a 60% pullback from those highs. For a lot of investors, that is terrifying. They see the red from $193 and think the story's over.
Did the bubble burst?
I don't think so. From a technical perspective, this pullback has created what I'd call a psychological base. The stock got overheated, the tours who were just chasing momentum got flushed out, and now it's finding a floor. It's stabilizing.
It's resetting the deck.
Exactly. And look at the sector. The NUKZX, the nuclear sector index, was up over 35% just through early January. The whole sector's lifting. Oklo trades at a premium, sure, but it's positioned to resume that upward momentum because the macro trend hasn't changed.
If anything, it's accelerated.
Precisely. The bubble didn't burst, it just let out some necessary steam.
Well, speaking of steam, let's talk about the fuel for this fire. The sentiment around Oklo shifted dramatically, largely due to one massive piece of news, the Meta catalyst. This feels like the moment the rubber met the road.
This is the game changer. This flips the narrative from cool science experiment to commercial reality. We're talking about a deal with Meta Facebook for a 1.2 gigawatt nuclear campus in Ohio.
1.2 gigawatts, that is massive. I mean, that's not powering a server room, that's powering a city.
It's enormous. And the details matter. It includes prepay funding. Meta is putting money down up front. The first phase is targeted for 2030.
Why is that prepay so significant? Is it just cash flow?
It's validation. Meta is saying, we need this power so badly, and we believe in your tech so much, we will fund it before it exists. It flips the narrative from maybe to when.
And it's non-dilutive. They don't have to sell more shares.
The holy grail for a growth stock. Meta is acting as the bank.
The huge distinction. And Wall Street has taken notice, too. The analysts aren't laughing at the zero revenue anymore.
They absolutely are not. The mood has shifted. Just in late January, we saw Texas Capital initiate a buy rating. Bank of America upgraded them. Seeking Alpha upgraded to a buy. The institutional consensus is building.
It feels like the smart money is starting to pile in.
It is. And remember, they've had heavy hitters from the start. Hydrazine Capital, that's connected to Sam Altman and Peter Thiel, was an early backer. Sam Altman, CEO of OpenAI, knew years ago that AI compute would hit a power wall.
He was building the gas station before he sold the cars?
You could say that. He knew the AI revolution would stall without this kind of energy solution.
So that Meta prepay, is it fair to view that as a form of accumulation?
I view it as a de facto accumulation. It's a capital commitment that anchors the company's future. It's institutional backing in its most direct form.
Okay, so we have the tech, cash, and the Meta deal. But as investors, we want to know what's next. What's on the catalyst calendar for the next 3 months?
Well, since there are no earnings, we're not waiting for an EPS beat. We're watching for milestones. A Q1 2026 update should be coming very soon.
Just a progress report, basically.
Yes, but the date you really need to circle on your calendar, put it in red ink, is July 4th, 2026.
Independence Day. Easy to remember. What happens then?
That is the Department of Energy's target date for criticality for their pilot reactors.
Criticality. That sounds intense. What does that mean for an investor?
It means the reactor sustains a nuclear chain reaction on its own. It's a moment the engine officially turns on and stays on.
The Kitty Hawk moment.
Perfect analogy. If they hit that target, it is a massive technical de-risking event. It proves the physics works in the real world, not just on a computer.
So that is a huge binary event. If they miss that date, what happens?
It would be ugly. The market is pricing in success. But leading up to that, we're watching progress at the Idaho National Lab. And of course, any updates from the Nuclear Regulatory Commission, the NRC.
Which brings us neatly to the other side of the coin, the risks. When you mention the NRC, I feel like I can hear a collective groan from anyone who follows this industry.
It's a fair reaction. The NRC is incredibly tough, as they should be. But for an investor, they are the primary bottleneck.
Yeah.
We have to remember, the NRC actually denied Oklo's initial application back in 2022.
They flat out denied it. That sounds like a major red flag.
They did. But the context is key. They cited insufficient information. Oklo tried to use a new risk-informed approach. They basically told the NRC, look, this reactor is so small and safe, we don't need all the systems you require for the giant plants.
And the NRC said no.
The NRC basically said, we don't know how to grade this homework. You didn't fill out the standard boxes. It was a clash of Silicon Valley speed versus bureaucratic process.
So if the NRC drags its feet now...
That 2027 revenue target pushes to 2028 or 2029. Regulatory delays are the single biggest risk to the timeline.
And I imagine the valuation is the other risk. We're paying a premium for a promise.
Absolutely. You are paying a premium today for earnings that might not fully materialize at scale until the 2030s. Some say 2034. That requires patience. If market sentiment shifts, stocks like Oklo can get punished severely.
So it's a long-term hold. You have to be willing to stomach the volatility. But looking at everything, the risks, the rewards, the fuel cycle, how do we score this?
Taking everything into account, I'm giving Oklo a bullish score of 8 out of 10.
An 8 out of 10? That's pretty high, given the regulatory risk. Walk us through why you're leaning that hard into the bull case.
It comes down to 3 pillars. First, the moat. The Aurora tech and fuel recycling is unique and defensible. Second, survivability. They have the cash, and the meta deal proves that big capital is waiting. And third, the entry point. The 60% pullback offers a really compelling opportunity to get in at a much better price.
It really is a bet on the macro, isn't it?
It is. It's a bet on the convergence of two massive trends: the skyrocketing energy needs of AI computing and the pro-nuclear shift in federal policy. The wind is at their back. Big tech wants this. The government wants this.
So what does this all mean for you, the listener? How should you frame this?
I'd leave you with this thought to ponder. We are in a world where AI power consumption is exploding. We know we can't burn coal forever to power our chatbots. In that world, is the company that takes nuclear waste, a liability, a danger, and turns it into clean, relentless energy. Is that company the ultimate green hedge for your portfolio?
That is a fascinating way to look at it. Turning a global liability into a prime asset. Well, we want to hear what you think. Is Oklo too risky? Or is it the future of energy? Let us know in the comments.
Thanks for listening, and we'll see you next time.
Don't forget to subscribe for your next wealth building analysis. Bye for now.